5 Nigerian banks have recently had their management replaced by the Central Bank of Nigeria. Bad loans totaling about 1.4 trillion naira is attributed to weak management systems in the affected institutions. Many analysts now advocate an overhaul of current banking practices where credit managers report only to bank directors and board members. Nurturing credit bureaus would collect information on lenders and borrowers.
What the credit bureau does is allows the bank to know the risk, the behavior of the obligor. You understand? So if I give you 50 naira as a bank and you default, I want to know about it. Okay, I want other banks to know about it so that they know that you're a risk. We cannot trust you with 50 naira.
Disclosure of information to credit bureaus is usually managed in secrecy. The advantage of this would be that money lenders and borrowers can access credible information on the status of transactions and character of individuals.
It is for the good of the banks themselves that client data or client credit data is made available. Correct client data is made available, and so as to ensure that such duplicate liabilities are not provided to the credit bureau. For the credit bureau to be able to function appropriately, and again, like I said, for the true value of the banks, it's to the value of the banks, that appropriate data is provided and correct data is provided to the credit bureau. So I assume they will be willing to provide such information to the credit bureau.
In October 2008, the Central Bank of Nigeria released guidelines for the operation of credit bureaus. The regulator hopes that problems could be reduced if banks share information and keep to operational guidelines of the bureau. Improved credit analysis and risk management skills could mitigate bank losses in future. Apart from the banks, insurance, bond ratings and top-tier investment can also make use of information from a growing number of credit bureau centers around the country.
As the credit bureaus come online, as banks begin to report, oh, I've given this person a loan, okay? Let's say Bank A is the first person that the gentleman took a loan from. Once Bank A reports that into the bureau, when this gentleman goes to Bank B, and Bank B does a check and realizes that this gentleman has taken a loan from Bank A, now, they are going to do two things. They're going to check his income or his cash flow. For this new loan, does he have the capacity to continue to pay the loan to the first bank and also take a loan from us? If he does, then they will give him a loan. They will also report it to the bureau. By the time it gets to Bank C may say, you know what, based on the loans you have from Bank A and Bank B, we cannot give you additional loans because we're going to overextend credit to you.
Credit bureaus are in their infancy in Nigeria, and they say they can only really do their job properly if banks are only willing to share information.